Hello, everyone, and welcome to the Money Flow Weekly Market Newsletter. I'm your host, Dr. BJ Love, and I'll be bringing you this week's update. Here at Money Flow, we use time-tested methods and indicators that helps us to stay on the right side of the market. Now, for the market brief and weekly outlook, this is as of Friday, May 29, 2026 close. Now, the market briefing, the market closed the week and the month on strong footing, with the major averages continuing their march to fresh record highs. The Dow Jones Industrial Average gained 363 points to finish at 51,032, while the S&P 500 added 16 points to close at 7,580, and the Nasdaq Composite advanced 55 points to settle at 26,973. Now, the primary trend remains firmly bullish. Investors continue to balance optimism surrounding the prospect of a potential geopolitical breakthrough, as is often the case during advancing markets. The headlines remain filled with reason for caution, yet price action continues to tell us a much different story. Now, from a technical perspective, the lessons remain unchanged. Let price show you the way. Let price show you the way. As we often say here at Money Flow, the trend is your friend until it ends. So while disciplined risk management remains essential, the evidence continues to favor the bulls as long as the major indexes maintain their upward trajectory and institutional capital continues to support market leaders. Now, until price proves otherwise, the primary trend deserves respect. And we will see that in the charts. Now, beyond equities, investors are watching several important intermarket indicators. We look at the VIX, which is now at 15, and as we reiterate each time we uh, distribute this newsletter or broadcast, as long as the VIX stays below that threshold of 20, markets tend to grind higher. That is what we have been noticing over the past year. Now, this reading of 15.32 from the VIX, it reflects continued confidence in risk assets, meaning uh, investors are pretty confident in investing in the risk assets rather than the utilities or bonds, those safe havens, that uh, money flows into when the market is uh, moving in a different direction. Now, gold closed at $4,570 an ounce, while silver finished at $76 an ounce. Crude oil settled at $88 as traders monitor developments surrounding the potential peace agreement in the Middle East. And we'll wait, watch, and see what happens. We're on again, off again, on again, off again, on again, off again. So we'll see what really pans out during the potential peace agreement in the Middle East. Now, meanwhile, Bitcoin closed at 73,825. Now, our takeaway for today, or this week, or every week, and we'll continue to study this phenomenon, that big money leaves a trail every day. Now, one of the most important principles in technical analysis is that institutional money cannot hide its footprint. Mutual funds, hedge funds, pension funds, sovereign wealth funds, and large asset managers control billions of dollars. Now, when they accumulate shares, they cannot complete their buying in a single transaction. Their activity creates a trail that appears on a chart through the combination of price and volume. And that is what we analyze here at Money Flow. We money flow price and volume. Now, volume is also often considered a leading indicator because it reveals conviction behind a move. Now, when a stock advances sharply on volume that is 2, 3, or even 10 times normal levels, it often signals that institutional buyers are aggressively building positions, and that is who we follow. This is commonly referred to as accumulation or the smart money, and that is what we do here at Money Flow. We um, analyze the charts to see where the smart money is flowing. And this week, we added to our portfolio Digital Turbine, ticker symbol APPS. Now, APPS recently demonstrated classic institutional accumulation behavior. The stock experienced a powerful breakout accompanied by volume that dramatically exceeds its average daily turnover. Now, the key takeaway is not simply the price increase, it is the fact that a move of this magnitude cannot occur without substantial institutional participation. Now, we're going to look at uh, Digital Turbine, capital ticker symbol APPS, in detail. Now, price tells you what is happening. Volume tells you how strongly institutions believe in it. So that is what we do. We don't try to reinvent the wheel. We simply follow the trail that the institutions leave for us in the form of price and volume, that trail that they leave every day. So, everyday trading, big money leaves a trail, right? The challenge for us as traders and investors is learning to recognize those footprints early. That is what we try to do here at Money Flow, and we do it quite well. We're getting better and better every day in every way. So volatility creates opportunity, but only for those who are prepared. And that is what we do here. We prepare on a daily basis to recognize that big money leaves a trail every day. We follow that trail. Now remember, this newsletter is prepared for client distribution. This is not investment advice. It is for educational and informational purposes only. Now let's move in to these charts. Now, as you can see, if you've been with us for a while, we have our 4 grid here, which gives us a snapshot of the S&P 500, the Dow Jones Industrial Average, the NASDAQ Composite, and the Russell 2000. Now, I'm going to go ahead and maximize these uh, windows here so we can see what's really happening. Now, if you've been with us for a while, we do have our proprietary software that always gives us a color coded signal. And right now, we're still in that green background, which is indicative of being in a long-term uptrend. This is a weekly chart. Each one of these bars represent 1 week of trading time. And here we like to say at Money Flow, long-term trends dominate, short-term trends fluctuate. So this is our dominant trend here. And as you can see, our philosophy is, our methodology is, as long as these prices stay above rising moving average. You have our 10-week moving average on top here. This is our gold, the gold line that you're looking at. And then you have the gray line, which is the 40-week moving average. And you can see we had a little bit of a penetration. It only lasted for about a week or so. And then we snapped back here about 8-9 weeks ago. And we are experiencing one of the greatest uh, moves from the trough to the peak in history, and we're still, as of last week, continuing to print fresh new highs. We have a brand new high on this is the Nasdaq Composite, and as you can see on our confirming, we do have a confirming indicator that helps us to uh, be more assured that the trend is intact. Our MACD is in positive. So here at the newsletter, we like to say we uh, have confidence and certainty and calmness when we navigate these markets and understand these signals. So that's the story with the NASDAQ Composite. We're going to move on to the Russell 2000. You can see a similar pattern. Weekly chart, the green background indicating that we are still in a bull market and have been since July of 2025. And we see the same pattern here that we saw in the NASDAQ. Prices above rising moving averages, and the confirming indicator, the MACD, is in a positive direction. So yes, as we've mentioned at the introduction, that the bull market is still intact. Moving on now to the S&P 500, similar pattern. All of these indices are agreeing, and when you have the major indices in agreement as far as direction in the market, especially on the long term, that is indicative of a strong bull market. As you can see, we had a fresh new high made last week, and our confirming indicator is giving us reassurance that we should be looking at higher highs. Moving on to our last chart, which is the Dow Jones Industrial. And again, green background indicates we're still in a bull market. We have our confirming indicator here, the MACD, giving us a reassurance that high probability of higher highs or the market continuing to move up. And as you can see here, the Dow had 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks of up, 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 and away. So with that, what is our takeaway? Our takeaway is, again, as we read in the introduction, the primary dominant trend of the market is up. And we're going to respect that, and then we're going to invest accordingly. So with that said, now we can go ahead into our analyzation of the other charts. Now we all have mentioned the VIX, and this is a daily chart. We looked at a weekly chart. As a matter of fact, let's go ahead and look at a daily and weekly simultaneously, so we can see what we like to see is that our daily and our weekly are moving in the same direction, and that gives us a very good indication of where we are currently in the market. So we mentioned the VIX. We're going to look at the VIX. As you can see, it is down on the weekly and down on the daily. So that gives us a very good conviction that the primary trend of the VIX is down, being at 15.8. We're going to look at oil. Oil, we do have a bit of a mixed signal here. We're up on the weekly, but showing some down action for the past 3 weeks, and we're definitely down on the daily. So I would say that we are neutral again on oil, and because it is now below that $90 a barrel, and we're going to continue to watch and see what happens with it. We're going to look at APPS. And as you can see, it has really, really moved very, very strong.